I'm Charlotte McLeod with the Investing News Network, and here today with me is Doug Groh, Portfolio Manager at Tocqueville Asset Management. Thanks so much for being here.
Thanks, Charlotte. Good to be with you.
I want to start by talking about your recent news. Tocqueville Asset Management recently announced a deal with Sprott. Can you share some of the details for our audience and what it means for you as a company?
Sure, you bet. We're real excited at Tocqueville. In August, we announced that Sprott Inc. would be acquiring the Tocqueville Gold strategy from Tocqueville Asset Management. And what that involves is basically the sub-advisory agreements that we have at Tocqueville are going to be assumed by Sprott Inc. Those advisory agreements oversee about $2 billion of equity investing in the gold mining sector. And we're quite excited. John Hathaway, myself, Ryan McIntyre, Victor Wong will all be joining Sprott, and we'll continue to do what we do at Tocqueville, and that is invest in the precious metals equity market.
Tell me how that deal came about. Is it something that you were planning for a while? Is it something that's related to the current gold price environment? What was the thinking behind it?
Sure. Well, we've been talking to Sprott for probably over a year and a half now. And in fact, earlier this year, Sprott and the Tocqueville team formed a joint venture starting a new fund called the Sprott Hathaway Special Situations Fund. We launched that in February, and we've had a lot of success with that. And I would kind of liken it to, we were introduced to Sprott about a year or so ago. We started dating in February and formed this joint venture. And now we announced that we're getting married, and we're going to join forces we'll close in January of next year. And so we're really looking forward to it. I think what it adds for us at Tocqueville is the opportunity to be with a group of people who are thinking in a like-minded way. We're focused on the precious metal sector, as is Sprott. Tocqueville Asset Management is not as focused on precious metals as it has been in the past. They're changing their focus a little bit to become more of a wealth manager. And they weren't really putting in the effort to promote the precious metal strategy. But I think being part of Sprott will be excellent for us and a good complement to what Sprott's all about. We bring active management and investing from a U.S. perspective to the Sprott organization. They have active managers, they offer ETFs, they offer bullion, they do lending, they have a broker-dealer. So they're across the board in terms of offering investment ideas and financing opportunities for their clients. And I think we bring another dimension to the Sprott organization.
Yeah, it sounds like there's going to be some good synergies in that case then.
I think so. I think it'll deepen our understanding of the precious metal space, and I think it adds another dimension for Sprott. We bring clients from Europe as well as the United States into the Sprott organization, so that's a good complement for them.
Okay, great. So we'll look forward to that closing next year.
Right.
Great. So right now we're sitting at the Precious Metals Summit. We're in Beaver Creek. What's been your sense of the mood here? You were presenting some of the speakers. You've been around for the last few days. How do you feel the atmosphere is?
Well, as many know, we've had a nice gold price move and silver price move in the last couple of months. So I think everybody's a little bit more excited, obviously, than they were earlier this year. And so people are thinking a little bit differently than they were a year ago. I think a year ago people were thinking about how can they manage their business to be profitable and keep their balance sheet in good form. Now people are having a little bit of a different view on life. They're being a little bit more imaginative about, well, with this new gold price environment, this new silver price environment, what opportunities can I do as a corporate, as a company, to create value? Not all the valuations have really been adjusted yet for this new price environment. So there are significant opportunities, in particular the smaller cap companies who are presenting here at Beaver Creek. They've somewhat participated in the precious metals price move, but not really fully. And I think there's larger companies who have a good valuation. They're looking at the opportunities perhaps to do M&A transactions, or perhaps to do joint ventures, or maybe provide some type of capital infusion into a company that maybe doesn't have that access to the marketplace. So there's a lot of different conversations going on which are really quite exciting, which wasn't the case a year ago.
Right. I'm going to touch on a few things that you just mentioned. So one of the things is the valuations of the junior companies that we see here. One thing I keep hearing is that they haven't moved yet. Can you offer any perspective on when we might see that happen? Is that connected to potentially doing deals with the bigger companies, or what would you think?
Well, I think there's a number of explanations for that, Charlotte. I think liquidity is an important concern for investors, and typically small cap companies don't have that liquidity that larger cap companies have. So you don't see the general market moving to the small caps until I think you'll see a much higher gold price. Certainly it's moved a lot.
Yeah.
I think part of that, though, is the gold price has to show the marketplace that it's stabilized. We've had a big move. Perhaps we have to have a little bit of a correction. And I don't know where that correction would be. We could look at the technicals, technical charts, and they might suggest a correction to 1480, 1450, maybe to 1425. But I think as much as there might be a correction, overall in the broader financial markets, there's a lot of anxiety and concern about lower interest rates, strong U.S. dollar. As you're probably well aware, gold is making new highs in almost all currencies but the U.S. dollar. So there are market participants that are watching the gold price. I think there are participants that feel they maybe missed the gold price, but they realize that they should have exposure to gold. So as much as we could correct by $50 or $75 an ounce, I think that would be very healthy, because I think it would shake out some of the weaker players, and you would then see those that maybe feel they have missed the move, they would have an opportunity then to participate. And I think with that, you'd also see a broader interest in the precious metal equities as well,
Yeah.
as investors take advantage of that lower precious metal price.
Okay, you mentioned concerns. Global concerns are impacting the gold price. Definitely true. Would you say that's the main driver right now? I know there's other things at play as well.
Yes, I would. I think if you want to, solidify it to one kind of driver, interest rates, the low interest rate environment is the main issue. But then you're going to open up the discussion of why are we having such low interest rates, and there's, tremendous debt levels, and there's governments around the world are trying to stimulate their economies. So there's a number of things that are going on, as always. Certainly the U.S.-Chinese trade war is an issue. I think there's political concerns, certainly in the U.S. Other countries have their concerns. I think it'll be very interesting in the election year that the U.S. has in the next 12 months, to see what happens to the gold market and financial markets, for all that matter. We're coming off highs in the financial markets, whether it's the bond market, where a lot of people are very concerned. They've done well with their bonds, but they're not getting paid for it with a yield. And they're looking for alternatives. And the precious metals space does a wonderful job of giving investors a diversified exposure in a portfolio invested in bonds and equities.
Yeah, one thing I haven't heard too much about is potential headwinds for gold, things that could knock it down from where it's going. Are there any that you would identify?
Well, I think, as far as the challenge for gold, I think if we went into a recession, I think initially there could be some concern for precious metal markets. However, I think that if we go into a recession, a lot of things are going to be, pretty distressed, and investors will, I think, look for those alternatives. I think they'll be taking their profits in the equity market. I would expect them to be taking their profits in the bond market. I would anticipate that they're going to be looking for hard asset exposure. I mean, that's what we're seeing now, so I think we're going to see more of that. I think as far as further challenges to the precious metals space, I think if interest rates rose rapidly, which wouldn't be good for other financial markets, that would certainly not be good for precious metals, but others might suffer more. So it's perhaps a degree of correction for various markets.
Do you have any specific price prediction for this year, or do you stay away from those? making those things?
Oh, I think to speak to prices, it's quite notable, obviously, that the gold price has broken out here to 1,500, 1,550. I think we are in a new environment. I think that we would be best served to see the price range between 1475 and 1550 for a period of time before we go up to higher levels. I think for the year we're probably going to be averaging maybe $1,350, $1,400 at best. I think 10% higher off a $1,400 price, which would put us at $1,550, say next year, is a good target for investors.
Okay. The last topic I want to touch on is trends in the gold space. We've talked about prices, but other trends. At this time last year, the big news was about mergers and acquisitions. There were all those mega mergers going on. What are you seeing at this point in time?
Well, I think the market participants were expecting that the large companies would be divesting of their assets, and there would be, properties to acquire from the Newmont Goldcorp combination or the Randgold Barrick combination. So I think a lot of companies were waiting to see what properties were available. So there wasn't really too much of an anticipation as a result of those mergers that there would be corporate merger activity among the junior and smaller companies. But I think as those two large mergers have come together and those companies look at their portfolio, they're trying to figure out which assets to sell. Meanwhile, we have a better gold price environment. We have the junior and mid-cap market, I think, recognizing that maybe those properties that would have been for sale from Barrick or Newmont Goldcorp don't necessarily fit the profile that a mid-cap company might benefit from. So I think you are seeing conversations with this gold price environment, which I think is a little bit more important than the mergers from last year, being a driver for the conversations with regard to mergers. Mm-hmm. I think you point out here that the smaller cap names have not really gotten the valuations. I think there's a lot of frustration among smaller cap corporate companies, corporate entities, and they're looking to become more relevant. To become more relevant, they have to have maybe 250,000 ounces, 500,000 ounces of annual production. They need some growth projects. They need to have a number of different maybe levers of growth opportunity in front of them. I think we will see more of that. I think it's probably something maybe either at the end of this year or maybe next year when you get the market comfortable with the price environment that has really just shifted in the last 4 or 5 months. That's when I think you'll see a little bit more of a active activity in terms of the M&A marketplace.
Okay, well that's everything from me, unless you have any final words you want to leave the audience with.
No, I think you covered the ground pretty well, Charlotte. It's good to be with you. Thank you.
Okay, well thank you so much for coming. It was great to speak with you. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Doug Groh with Tocqueville Asset Management.